Welcome to Optily Radio, your regular 30-minute dose of everything you need to accelerate your e-commerce marketing success.
Welcome back to Optily Radio. I'm your host, Nina White. We've talked to experts across the digital marketing and e-commerce industries in depth about what tactics worked for them for growing their businesses through marketing efforts. And a big factor in running marketing campaigns, though, is having the cash flow to do so. In this episode, we're going to talk to a fintech expert about the difficulties that founders face with liquidity in the earlier stages of running an online store or when they've plateaued a bit, and how revenue-based financing can help them scale quickly. So, let's get right into this discussion on marketing finance options. Today's guest is Daniel Lipinski, CEO and founder of Outfund. Outfund is a new player in the fintech space, specializing in revenue-based funding for e-commerce startups. Prior to starting Outfund, Daniel was CEO of Parcelbright, a VC-backed logistics platform which was acquired in 2016. And joining us today from the Optily team, we have our finance director, Hilary Knox. Hilary is a chartered accountant with over 20 years of experience in the finance industry, working in financial planning, reporting, and analysis for several companies across Ireland and Australia, including 10 years at Vodafone. So welcome to the show, Daniel and Hilary.
Hi, guys.
Thank you very much, Nina. Welcome.
Great. So how are things over in London these days? Rainy as usual, or?
Today, it's a bit miserable today. I'm not going to lie. It's I was just looking out the window there. So this morning it was drizzling on the way in, but I think similar to you guys in Ireland, we've had a pretty poor summer. Although lockdown last year was really great because we had a great summer. So even though we were stuck inside, we had a better weather, right?
Yeah, I'm definitely waiting for the rains to come, but it's been really nice, hasn't it, Hilary, recently in Dublin?
It has. It's a typical back to school thing. The kids go back to school, we get some great weather. But this week it's starting to get a bit chilly again, a bit too close to the winter for me. So I'm going to have to get the heating on.
Awesome. So Daniel, why don't you start off by telling us a little bit about yourself, how it is you got into the world of finance, and what caused you to start Outfund?
Perfect. Well, first of all, thank you very much for having me today. I'm very excited to speak with you guys. I know we've been partnered for a while, so it's great to kind of contribute to your community and the rest of your network. So for me, I've been in the startup space my whole life. After leaving university, I decided to actually become a chartered surveyor, which was probably the worst thing in the world for a kind of an entrepreneur person to do. Counting bricks and walls is pretty horrible. So immediately after I kind of did a master's, I found out about a new company called Quinoa, which was a clone of Groupon in the US. And that was my first kind of entry into the startup world. That's where I met some really great exited founders who have moved on to their second, third business already. So they kind of took me under their wing, and that was my entry into startups in 2007. After there, we joined Groupon, another fast-paced startup. So when I joined in the UK, there was 50 employees, and when I left, there was about 1,000. So what I tried to do was learn from other CEOs that have done really well for themselves and learn how to go about scaling execution. And then from there, that was my entry into raising capital myself for my first business, which you mentioned before, called Parcelbright. Essentially, what we did there was created an API that connected into all the different delivery companies in the UK. We funneled all that information into one API, and we negotiated volume discount deals with the delivery companies that we worked with. So with one integration, we sold that to small businesses, e-commerce businesses primarily. So with that API and platform, they got access to the whole market. So if they were sending, I don't know, let's say you're a retail store selling clothing, you might have shoes and a t-shirt or some bigger, bulkier items, and because of that you needed multiple different delivery options, and through our platform we were able to service you all with one API, and we did very well. We ended up doing about 500,000 parcels a month, I believe, through the platform. And then we exited in 2016 to one of our largest competitors. So that was my first kind of entry into really the real startup grind, raising capital myself, building out a team, and the execution of that. But in a very challenging and very competitive market, which is logistics. It's been around forever, so there wasn't too much innovation that could happen in that space. But we worked our hardest to get that done. And after that, I took some time out, consulted for an energy company with 5,000 people. Probably one of the worst experiences of my life, working in a big corporate. I don't know what your guys' background has been like, but I don't know, working for inverted commas the man, even though you're an entrepreneur, was a horrible place to be. But I think everyone's got those learning experiences along the way that shows them that that their path is the right one to go on. So after that, that's when we launched Outfund. There was a few iterations of a product as we learned about the business finance space, especially in the UK. But we've been doing this model for about 2 years already, very successfully. I'd say we definitely not only the fastest growing lender in the UK, but the biggest e-commerce investor in the UK. So things are going very well. So it's that's kind of my entry. So I've just been in startup world my whole life, really.
Cool. Yeah, definitely feel you with the giant companies. I'm a small company kind of girl. So Outfund does revenue-based financing. So do you want to just quickly explain what exactly that is and how that might be a better option for small businesses than some of the more traditional approaches to funding?
For sure. So I'll give you a kind of a high-level overview of what we do. So Outfund, we're the largest e-commerce investor in the UK. Actually, we've just recently launched in Spain and Australia last month, looking to launch in the US in a very short space of time in the coming weeks. And what we do is we provide growth capital to online businesses primarily for them to invest into inventory and marketing. So what we provide is non-dilutive capital, and we don't take personal guarantees from customers either. So if you compare us to a traditional lender like a bank or alternative finance provider, they come with very strict repayment terms, very strict covenants, and often you have to put your home on the line to get that capital. Or if you go the VC route looking to get equity, you have to dilute your business and give away shares in your company in order to get that capital and grow. So we're completely different to that. Again, we don't take any equity. We don't take any personal guarantees from the company or any security. It's purely funding from £10,000 to £2 million, and we work on something called a revenue share agreement with that customer. So what that means is, unlike traditional lenders where you have very fixed repayments every single day or week or month, with Outfund, we take anything between 1% and 20% of your revenue to repay back that facility we gave you. So why that important is because with that funding, as your revenue grows, we're in line with that revenue. So our repayments are in line with the growth. But say you have a down month or a seasonal business, our repayments work alongside that. So if your revenue goes down, our repayments go down as well. So it's probably one of the fairest and most flexible ways to raise capital in the market today. And also we work on a fixed fee. So say, for example, we give you £100,000 at 4%, you repay back £104,000, and that's it. There's no hidden fees, there's no other charges or anything like that. So in advance of taking the facility exactly how much it's going to cost you, compared to, I don't know, a traditional bank who work on like an APR or an interest rate monthly. And because of that, it's very hard to kind of work out how much you're going to be repaying back at the end, and what your monthly repayments are. Whereas with us, like I said, you know exactly how much you're repaying back, and the fixed fee tells you that, and the revenue share is a percentage of your new sales that you make every month to repay it back. So again, the most flexible way to get capital today without giving away a piece of your company. So that's pretty much us. But in terms of how it works, we use live data to make our lending decisions. So when you come onto our platform, we ask you to connect all your different revenue streams like your Stripe, your PayPal, your Shopify. We even connect into open banking, your Xero for your accounting information. So the application probably takes about 3 minutes. Once you've connected all your platforms together, we're able to then analyze that information and then within 24 hours give you an offer up to £2 million for funding. And again, compared to other lenders in the market who might take weeks or months, we had a customer that come in the other day who was talking with Barclays, and they're already on their second month trying to get funding. So it's probably the fairest, most flexible way to do it. But not only that, we're very quick. So the whole point about what we do today is providing capital, but it is what's the correct way? Non-biased, because we're using data. We can make our lending decisions very quickly, but also very fairly. So I think we looked at the figures the other day. About 45% of our user base are female founders. So I think that's a very important fact, that generally female founders are very underrepresented in both equity and getting capital from banks, because I think there's a bit of a discrimination, if I'm honest, that happens in the space inadvertently, and because we only rely on data, we use that to make our decisions, not in terms of the person running the business, but how well that business has been run. And we deploy the capital that we give you onto a virtual card, so you get to connect that into your Facebook and Google ads to acquire more customers, or you can use that capital to buy more inventory to help your business grow. So we direct it towards that growth for your business, and that's the reason why we can give probably the cheapest rates in the market at the moment.
That sounds great. Can I ask,
Sure.
if an individual has availed of the facility and they absolutely love it and they've gotten great returns, can they avail of it more than once?
For sure. Yeah, so how we work is we normally reinvest about 7 times a year into the portfolio that we work with. Because we only get repaid back on how well your business does, we heavily invested into your growth. And we've got a team here that, after we give you the funding, is directed towards pretty much helping you do everything and anything, whether that's getting the right logistics provider, helping you with a marketing agency, even sometimes introducing to new banks who are a bit more founder friendly and whatnot. So we do everything in our power to make your business succeed outside of the funding that we give you, even if that's an introduction to a venture capital firm. Like, we will literally bend over backwards to help you. And the rationale behind that is, the better you do, the better we do, and the more long-term relationship and partnership we can have. We've got customers who have been already with us for 2 years. We've probably helped them with 10 different facilities. They've gone on to raise £20 million of funding, and we still support them. And because we can just graduate with them, the bigger they are, the more capital we can provide. And it's as simple as that, really.
Excellent.
That's amazing that it's not just, the tech and the money. You also get that support and, basically like, your own specialized consultant almost. That's great.
Yeah,
That's
very
really
much so. We're calling them literally the growth team, and everyone gets allocated a specific person in the company, and their sole role, if they don't bend over backwards, it's not going to be good for them, but it's going to be good for you. So yeah, we try everything possible to make that happen.
That's great. So what does a typical Outfund client look like? What are the usual problems that they come to you with? And yeah, what do they look like? What kind of businesses are we talking here?
For sure. So before they were a little bit more restrictive than what we are today. Now we've quite broadened the types of businesses that we help fund. That's primarily because we've introduced a new tool, which is a categorization engine for B2B businesses. So now we can fund not only online businesses, so your traditional e-commerce company that sells clothing or shoes or whatnot online, all the way up to SaaS businesses who don't use a payment processor but invoice their customer. So we're able to provide capital and funding to those types of companies as well, regardless if they're using a specific payment processor. But by and large, we work with online businesses. So anyone that uses a tool like Stripe, PayPal, a marketplace like Amazon, eBay, or Shopify as their platform, those are the 90% of our customer base that we help. And they operate across industries. We've got Christmas hamper companies, we've got candle making companies, we've got clothing, as well as weird and wonderful things like neon lights for above your bed. It's a very broad type of product range that we go for, but that we find it really exciting and fun because every single day we get to meet different businesses, different business models, and you'll be surprised at the things that come our way, but also what people buy and what does well. It's quite magical sometimes.
Awesome, awesome. So, what are some of the major problems that they have? Is it more inventory? Is it more just jumpstarting their marketing goals? What are some of the things that, seem to be kind of the big ticket items that they come to you guys for?
Sure. I'd probably say that the biggest challenge all our customers face is, they've got nowhere to turn. They've got no support available to them. You might hear all these big and wonderful stories about people raising 50 million pounds and doing X, Y, and Z from top tier VCs. But you know what? By and large, most businesses in the UK have never heard about a venture capital firm, haven't spoken to someone. They've grown organically. They've grown from their bedroom or their kitchen, etc., and they've done very well from that. And those are the vast majority of businesses that, number one, we prefer funding because the founders worked extremely hard. They've been very successful and they know their business really, really well. And organic growth is sometimes the best growth. But at the same time, they want something to jumpstart their and to supercharge their growth. They've got some capital to last them a little bit of time. But if they invest all that money into marketing, they don't have enough to pay payroll or operational expenses or product improvements that they want to do or expand internationally into another territory. So what we do is we help those scalable, repeatable business models that people have. So that founder might go to a bank and the bank will be like, you know what, we don't really understand your business model. It's a bit out there to what we used to. Like, you're not an accountant that gets paid like a monthly fee from your user base or something like that, or a lawyer. So more traditional offline businesses are really good for those banks and those alternative lenders. But nowadays, there's so many different ways of making capital, of utilizing their money into Facebook and Google ads to acquire customers that these banks and other lenders don't understand. And because we're marketeers, we're entrepreneurs first, that's exactly what we do. We understand exactly how they spend the money, where to use it, and how wisely to use it. So their problems are, they can't get capital. They've not heard of venture capital. There's nowhere for them to find that. There's not an easy route in. So it's very challenging for them to grow or break out certain parameters. They might be doing £50,000 a month revenue, but they've been doing that for months on end, and there's no way they've got a positive ROAS. They're doing really well with their business marketing, and they've got a profitable business, but they don't have that spare capital to grow. So that's what Outfund does: is we provide them that supercharged growth capital and funding, especially with their positive return on spend. So I just say that they've got nowhere to turn. They don't have people that understand them or their business model. And that's probably the biggest challenges they have: the access to capital, the speed at which that comes, and also the frequency of that capital, all of which hopefully we can provide them.
Cool. So just focusing on the pandemic a little bit, it is sort of the theme of the past year and a half. So have you noticed that the pandemic has changed some of the needs of e-commerce companies with regard to funding?
I think that's probably the most important thing that we've learned along in the past year and a half is, I think lots of companies were very reliant on one or two suppliers for their business, and I think a few people initially got a big shock. When supply chains went down, they weren't able to get the types of goods or services that they were used to, and there was this little bit of a supply chain shock that hit the system very early on. So because of that, I think generally prices for items were going really, really high. Shipping was very, very expensive for these businesses, and they were having a bit of a hard time. Like, I think, especially for us, we did take a little bit of we took a step back. We analyzed more holistically what the market was like. Where are these customers finding their goods from? Are they all from China? How easy is it to get goods into the country? And then the next thing that happened was Brexit. I think that was probably worse for a harder time for customers, right? The ambiguity as to what fees there are that they have to pay. How do they get things past customs? What do they need to do? That was a huge headache for businesses, probably more so than the pandemic. And you know what? We still have people now suffering from Brexit, I'd say, because it's just it's a real challenge. Businesses don't understand what to do, and it's still early on. So I think it's going to be these effects have been felt for a long time. But in terms of what the pandemic did, is obviously forced everyone online. You couldn't go to a retail store. All your shopping habits were fine, probably 50% physical and 50% online, but now it went to like 100% online. So people were inundated with demand. And the only way for them to acquire those customers, these businesses, was, pump their marketing. Marketing got a little bit more expensive because, everyone was doing that, so their capital requirements were bigger. For us, obviously we saw a huge uplift, and we still are. E-commerce anyway was growing exponentially, but this really, we pushed it home. And I think, yeah, the supply chain shock was the biggest impact factor I think we had. But I think most businesses did a very good job at either replacing current suppliers or being a bit more, managing customers' expectations. I would say was the biggest thing that came out of that. And we also help a lot of our customers with their supply chain, sometimes negotiating and helping their suppliers as well, because I think, again, we're heavily invested in their growth, so that anything that we can do to help them is right up our alley.
Can I just ask, so you mentioned you were like geographically, you've done some funding down in Australia and you're obviously based in the UK.
Yeah.
Have you got growth plans yourselves to expand further afield?
For sure. So, like you quite rightly said, Australia and Spain are both kind of new territories for us. We've got country managers in each, and then we've built out a team around them. So in Australia, we've got 7 people already. Spain, we've got 5, and that's in about 2 months. So that those markets are growing exponentially for us. Yeah, we want to go international in other territories as fast as possible throughout Europe. We've already got plans for the next 2 territories that we want to enter into. So growth international is on our immediate roadmap. And yeah, we're getting there as fast as we can. Fortunately enough, we built the system in a way that enables us to grow very quickly and across borders. And yeah, no, an exciting time, but also challenges with growth. Team, we're about 40 odd people in our team. We're looking to get to probably about 50, 60 almost by the end of the year. So that level of growth is what we're seeing at the moment.
Great.
So you're practicing what
Sounds
you
great.
preach.
But we're trying. Yeah.
Awesome. So, switching gears a little bit here, I was digging through some of your social media experiments that you were running last summer, and I found the really interesting one you did on social spending. So, I was just wondering if maybe you could talk a little bit about what this experiment was and what some of the interesting takeaways were from that.
Sure. It's a good question. You know what what we were trying to do was see the impact of obviously marketing. We know how well it does generally, but in terms of the social spend of a customer and how that's impacted by how many ads that they kind of see. So what we decided to do was literally pay people, random people in the UK market we gave them a set budget, and we said, all the ads that you see, you have to buy their product within a certain budget, right? So the goal was to see how many ads people interact with, and are there. By the way, we did say to them, you have to actually like the product that you're seeing, right? And then you have to mark down how many ads you've seen, so how many products you would have bought if you had the budget for it. So the goal was to see, in reality, if a customer does have the budget available to buy a product, would they buy it? So that's the experiment that we ran. Obviously, it was successful because who doesn't want to have free money to buy products? But the goal really was to influence not only to come up with data research just to find out how well the impact of those number of ads to an acquisition, but then also how many relevant ads are being shown to that user base. Because we said to a guy in his mid-30s, a lady in her early 20s, you've got X amount of money to spend, but you have to buy on a relevant ad and product that you would have ordinarily bought. So yeah, we've got the data for that, and we're soon to be releasing kind of a report to kind of detail the results of that. And it's really number one for our own internal idea to see where customers how how best to improve the marketing efforts across all our customer base. Because again, our sole goal, the better they market themselves, the better they perform, the better we perform, because we get to work alongside them for a longer period of time. So that was really the idea behind it. We're still analyzing it. We had, a lot of people apply. It's a very interesting experiment. Yeah, we keep your eyes tuned to see what we release soon. But yeah, it'll come out shortly.
Have
For
you,
sure.
of the results that you've seen, has anything surprised you yet?
Um, if I'm honest, I thought ads would perform worse than they have done. Like generally, they are very extremely targeted, much more so than you would have ever imagined. That the power of Facebook and Instagram is actually quite scary, but also hugely exciting. Like I see it myself, trawling something just online, and you get presented with quite targeted ads that are like quite meaningful to you, much more so than I ever would have thought possible. And it just really highlighted to us like how well our customers are doing, and because of that, we're actually releasing internal insights tools for our customers to see, number one, how well they're performing across all the different channels in one place, but also like gives them kind of indications how well they're performing across the market. And I think that's a very powerful tool to give customers to understand where do they sit in the market compared to other people in this space, whether they're customers ours or not. We're collecting data from everywhere, and we're presenting in a way to see, okay, my money is actually better spent here than it is there. So I think those were the real impacts that came out of that study.
Yeah, it's a fascinating experiment. It'd be almost interesting to do it again, maybe like in a couple of years, just to see the effect of things like iOS 14 and Google's, third-party cookie things. So yeah, that's definitely
Sure. All those
fascinating
came out
data.
after we did the study. So I don't have any insight into that. But also, we need to close a much larger round before we
For
can start
sure.
giving away that budget again.
More free
Yeah.
money.
Yeah, more free money,
Don't
exactly.
forget us when you do the free money bit.
Don't worry, I've got a queue of people already.
Awesome.
Yeah,
So I'm hoping you could tell us like one recent success story with Outfund of a client that did really well, that was, almost surprisingly well how they did.
for sure. It's a good question. I'll probably say our friends at Feel. So Feel, Feel, they are a vitamin subscription company. You've probably seen them plastered all over our website. The reason why is because Boris is the founder. We love them as a team. I think they're a great business, and we supported them, from their very early in their inception, and they've grown, at 400%. I'd say, with the capital we give them. We give them funding capital like quite regularly, but more and more because they're growing faster. And recently, probably the biggest thing that we got excited about is they signed a partnership with Cheryl Tweedy. I forget what her surname is these days, but Cheryl from the X Factor. But yeah, she's a great role model to have for their business. And because of that, they've shot up even exponentially since they've done that partnership. But yeah, it's been great to support them, for them to move over from a small, relatively unknown brand to a mass market leader in their space. And we're continuing to support them. So I think it's a very exciting project to be involved in. And anything that we can do, and we try to promote our customers as well. You might see us socially, both on LinkedIn and across the ads that we run. We run ads with our customers. They're real people. We fund them. We want them to be successful too. And if they can make some kind of impact on their business through our ads and out of what we run, all the better. We really are. Anything we can do to help that customer is what we do. Yeah.
Great. Awesome. So, our last question that we always like to ask guests is if they come away with this episode from just one thing that they can use to implement that will help them accelerate their online businesses, what is that one thing you would like for our listeners to come away with?
Sure. Well, other than Outfund, obviously, I would say do your research. I think there's many more tools available to you than you ever thought imaginable. Companies like us, we reinventing the space. We're trying our best to make your life easier, especially for online entrepreneurs. And there's a whole community directed towards e-commerce and business and online businesses for them to succeed. So take your time, do your research, learn about revenue-based finance. Companies like us are in the space. not everyone is equal, and because of that, I think you should go with data-driven approaches. Like I mentioned, 45% of our portfolio are female founders. I think that's very important, because the industry is not perfect in general. So I think be concise where you go. Try to find the right people that support you and your growth and your objectives, because sometimes those companies are in it for the short term. If you find a long-term partner, I think that's probably the best thing to do. And take your time, and especially now coming up to Christmas, buy early, get your stock in while you can. Don't make the mistake that we see hundreds of businesses make all the time, right? Get in there early, make sure you got the stock, and fulfill your customers' orders on time. And should there be a problem coming up to Christmas with Black Friday, be quick to resolve those customer queries and work hard to that, because reputation is everything that we've learned, and we use that along in our underwriting techniques as well to make sure that types of businesses that we invest in care about their users. So that's those are the few kind of takeaways I would say.
Awesome. Those were great. Well, thank you so much for being on the show, Daniel. Hillary, it's been a pleasure having you both on.
Thank you.
Great. Thank you very much.
Cash flow ebbs and flows are a reality for most early-stage startups, and revenue-based financing can be a potential solution to help ensure growth at all times. If you're interested in connecting with Daniel and his team, you can contact them at out.fund. Optily also offers revenue-based financing through our trusted partners, which include Outfund, and if you're approved, you get the Optily ad optimization software free for 3 months. Check out Optily Advance on our website for more information. And in 2 weeks' time, we'll have Chase Clymer in the virtual studio with us. Chase is a fellow e-commerce podcast host and the co-founder of an e-commerce design and marketing agency called Electric Eye. We'll be picking his brain on overall trends and ways to prepare for the holiday season. Stay safe, and we'll catch you back here next time on Optily Radio.